Hello and welcome everybody. This is Sarah Snell Cooke with the Credit Union Connection. I'm here today with Catherine York Powers. Welcome.
Thank you for having me.
Absolutely. Catherine, give us a little your background and tell us about Constant and what just a high level what you're doing for community financial institutions, including credit unions, of course.
Yeah, absolutely. So in 2015, we started Constant as a home improvement lender, and we'd actually built software back then to originate loans in, 2 to 3 minutes, making it very easy on the front end for borrowers to be funded. And we were servicing all of those loans. They were coming in from 33 states. And what we realized was that the servicing side of it was so cumbersome, so expensive, and so people focused that we needed to look for ways to automate those processes like we had done on the front end. So this version of Constant was born, where we have a platform where we're automating most of those loan operations efforts that happen in the back office. And then we're leveraging those to help drive new revenue as well.
Yeah, always important, but especially now. You've
For
got,
sure.
difficulties with lending. You've got Washington like taking away all the non-interest income, the alleged junk fees. And so, yeah, everybody who's a small lender is kind of struggling in that area as far as generating new revenue. Um, but first, I want to back up a little too. As I started to say, the lending right now is challenged, and those loans that have been made have some of them are becoming challenged. What are you seeing in the environment that might give a little hope on that end?
Yeah, it's really interesting. So, in addition to the credit unions and regional banks that we serve today, we're also talking to lots of folks that are prospects of ours, and the outlook is actually mixed. It's interesting. We're hearing a lot about liquidity concerns, not a surprise. But then sometimes we're talking about how we're generating revenue, and folks will say, "Well, hey, we're fine on the liquidity front." So it's really interesting to see how the lending environment today is impacting community financial institutions and what they've done to both prepare for that in the past 12 months in anticipation of everything slowing down, and some that took a little bit more risk, right? We're seeing a lot of auto loans in particular that were originated post-COVID starting to go bad. You're seeing a lot more loan sales in the market. I think I saw one yesterday with Space
Yes.
Coast. But there's plenty of that activity happening as well. I think the common theme right now, especially for CEOs and CFOs, is to look for ways to diversify revenue, and create more efficiencies. And that's not obviously just about what we do, but I think that's just the general message right now because loans are starting to go bad. You are getting or seeing a lot more requests for hardship relief. And you have to serve those members and make sure that they have the help and support that they need. But on the other side, you have to find ways to generate revenue. And so if liquidity is a concern, and originating new loans is not the focus right now, if you're just supporting runoff, basically, then you have to look for fee income. And with the CFPB and CUAs focused on overdraft fees and NSFs, it's made that really difficult because that's been a big source of fee income for a lot of credit
Mhm.
unions. So you're seeing a focus on just diversification of income in general.
Hmm. Yeah, and to your point, they have to look at that. Even, there's the Credit Card Act that or Credit Card Competition Act that is looking
Mhm.
to cut interchange even farther. So,
That's
yeah,
right.
lots of different ways credit unions could be losing income. So obviously, ultra important to be diversifying the revenue streams. Um, and then the other thing is too, because I think you all also do collections. What are you seeing on that front? How is that going? As far as productivity among your clients.
Yeah, it's interesting. Our platform helps to automate a whole range of loan operations efforts. And while we don't look at ourselves as really a collections shop, we are focusing on hardship relief in general. So how do we keep people out of collections? And so part of that is just making sure that hardship relief is available in digital banking. And so when we're talking to folks, we're saying, look, it doesn't matter whether you're using our platform or somebody else's. The idea of making sure that hardship relief is front and center, that members know how to find that relief and access it quickly, and get a response back from the credit union quickly is really important, because a lot of times that can take 30 to 45 days and they're rolling into the next bucket. And that's not good for anyone. It hurts retention as well. So we are starting to see, this is not news to anyone, delinquency is definitely rising, but our focus, and while we do, payment plans and other things in an automated way, our focus really is on that hardship relief and
Mhm.
mimicking the conversation that a member would have in a branch, right? In a branch office. So why are you here today? What is your hardship? Is it long-term or short-term? And depending on what that is, they may go down different paths versus just saying, hey, all these people have hardship relief, give them a, 1 month deferment. You don't know that that's actually curing the issue. So we are very outspoken about this, and
Mhm.
have been at a bunch of conferences just talking about, like, let's help members stay out of collections. And sometimes that means a change of policy.
Mhm.
Um, the one thing that I hear consistently is that when members are asking for hardship relief, we make it difficult for them to not just find out what programs are available, but then they have to write an essay as to what's happening in their life, literally a written essay. Don't know what the ADA workaround is for that. And they have to share their expenses, be asked about why they're spending money on certain things. And on the other hand, when we're lending money, we can provide, credit, say $50,000 in credit on stated income. So it's just a matter of changing the credit policies, and making sure that help is available and can be done quickly.
Yeah, that's interesting. We bring up the policies too. What are some of the more common kind of sticking points among the policies of the community lenders?
Yeah, I think the when we talk about, if you're just asking about hardship relief and on the collection side, I think that community financial institutions have done this the same way for 20, 30, 40 years. Obviously there was a big change when we had the last major recession, but a lot of those changes were around mortgages, and really when you saw the appearance of full loan modifications and so forth. But it's still really hard to access that relief. So when somebody applies for credit, the reason that's been automated is because credit unions have put situations into different buckets. And when you put them into buckets, you can build policies around them, and then you can automate that. And there's no reason you can't do that for hardship relief as well, right? There's short-term issues, there are long-term issues, and there are policies that support those, and there are a number of questions that can be asked to make sure that you're putting the member in the right bucket, and that can be automated as well. We're just not seeing that, and that's across a vast majority of community financial institutions. So we're helping with that policy development. That's just
Hmm.
something we do for free. Like, let me help you with your policies, whether you
Right.
automate them or not. But once you do that, you can automate it in the very same way that you do when issuing credit.
Hmm. And that's another point too, the automation. That's, I mean, creating the efficiencies on the back end. It's less sexy than making loans or now, bringing in deposits or whatever, but it's certainly something that it helps credit unions in particular, I think, return um, the best to their members, the best for their members' investment, because that's what they're here for, is to serve the members and give them the best return. Um, so, as far as automation is concerned, how do you feel? What grade would you give the credit union community?
On the front end origination, I think it's pretty high, right? So there
Hmm.
are a number of companies that provide those services. On the back end, I think it's pretty low.
Hmm.
We still talk to folks, skip a pay, let's just use that workflow. It's really common across the credit union space and small community financial institutions as well, but really known in the credit union space. A couple of digital banking platforms have automated that workflow and brought that into digital banking, but for those cases that are plain vanilla, right? No exceptions. Um, that should be something I think that is fully automated. It's not easy to do because it can be up to 12 to 13 steps in the back office. It can touch two people. The rules that drive that can run anywhere between 10 to 13 rules. But again, it's just a matter of deciding that you want to make that process efficient. So some of that is making sure that your lending team is not just focusing on how to automate origination and bring new loans in, but you have to focus the attention and be uh, or make that a priority. And when you have that leadership, then you make decisions like automating those kinds of workflows. And it's not enough to automate it, right? So you can make your team's life better, but the whole point is to make your members' life better as well, right? So you've got to
Mhm.
bring that into digital banking. That's where they are. They're on their mobile devices. So like with Constant, whether it's a due date change or a payment skip or even hardship relief and deferments, loan modifications, et cetera, it's just a matter of seeing that tile in digital banking, clicking on it, going through a handful of steps, and the relief option has been provided and it's totally updated in the core system. We believe that that's not only helpful for the member, but it's also helpful to staff as well. I don't know anybody that joined a credit union to, push buttons and process stuff all day long.
Right,
It's not
right.
anyone's dream.
Nope. No, 100% agree. And it is an area I feel like, and you kind of said too, it just doesn't get the attention on the back end, the back office technologies that we are so excited to serve our members on the front end with, where that's kind of where the attention ends up lying. But we do have to give our employees the best experience ever too, because they're also a member.
Sure, yeah.
And I think it also behooves credit because it would, if my job's easier and I don't have to be staring there filling, making sure all the fields are filled out in a form or whatever, I can have more energy and more drive to go and serve those members. And so I feel like it feeds the front end as well.
It's a huge, that is a major point for us when we talk to folks. So, efficiencies, driving efficiencies helps the bottom line. The members are happy because they can access these workflows and their support online. But your back office team, if they're not processing these things in the core all day long, then you can cross train them to help solve really complex issues that come in the door
Mhm.
from members. So you're actually helping members more by helping your team. I think it's really a really important point. And
Yes.
you said, that the focus is usually on the front end, and I'll be very honest with you. The conversation about efficiency is always important. If you look at all of the surveys, and Jack Henry just came out with their new study, and efficiency is always improving efficiency always ranks really high. But when the rubber meets the road and making that financial decision or going into strategic planning or prioritization meetings, um, it always ends up second or third. Like the servicing teams, the collection teams are always so frustrated because I think providing technology to them always takes a backseat to anything that is driving new fee income, driving
Mhm.
interest income. And that's one of the reasons why we rolled up Income Builder, because now that we have people in digital banking, members in digital banking that are accessing these workflows, we found a way to convert them into fee and interest income because we understand that we have to come in and solve both of those things.
Mhm. And you have to lay that foundation for the front end to work properly. You have to lay that back end foundation, I feel like. But
No
you've
doubt.
also mentioned earning new fee income. Tell me a little bit more about that.
Yeah, so if we think about loan protection products, for example, so guaranteed asset protection, extended warranty, debt protection, those are the kinds of products that are normally sold at origination, which is a moment in time, right? But then credit unions are with those members for, 1, 2, maybe 5 years, depending on the loan type. However, there is not usually an automated way to continuously offer those safety nets, and they really are safety nets, right? When it comes to payment protection or protection in the case of um, theft or total loss. um, and there's just not usually a program in place. Now, if a member happens to see that these products are offered online, they can call a loan officer, and somebody will probably have the training to offer it. And every once in a while, we have talked to a couple of credit unions recently that have formalized a program where they're making outbound calls or sending emails. But in general, there is not an automated way to offer these products. And when we talk about penetration of these products, into into members that have loans, it's pretty low, right? We're hearing
Mhm.
anything from single digits to, I think the highest we've heard is 40%, which is an outlier.
Mhm.
Um, and from a member perspective, getting access to those safety nets throughout the life of their loan is important. From a credit union perspective, that fee income is so critical, especially if you're looking to replace the lost fee income from NSFs and overdraft fees. And in fact, they're usually a lot higher on a per transaction basis. So we found a way to leverage, for example, an automated skip a pay into an opportunity to provide that offer.
Mhm.
So one example would be we always ask why someone's skipping a payment. That's not usually typical. But one of the options is higher vehicle expenses. So if somebody says that, that's an opportunity to offer them an extended warranty or debt protection. And we can see in the core, because we're connected to a bunch of fields in the core, we can see which product they have or don't have. And we're only going to offer them the one that one, the credit union wants us to offer, and two,
Mhm.
that they don't already have. And it's tied to their answers to those questions. So that's how we're showing up today. And I think that helps credit union executives not just see the benefit of the efficiencies that we're driving, but also the fee and interest income as well.
Okay, so yeah. I think the common knowledge right now is that the Fed plans to reduce rates at least once this year. And we're looking at possibly three next year, and this may help get consumers back on the ball with lending or borrowing. Um, and so there's obviously this, while we of course have current income, interest income, we're also looking at even potentially more lending, more interest income going forward. So can you talk a little bit about that as well?
Yeah, I mean, I think those financial institutions that have liquidity are going to be really happy, but no matter what, there is going to be the need to have programs in place to retain members because as rates start to come down, and who knows, but I suspect that they won't come down a lot this year. But now is the time to prepare for that because I mean, we all have loans. I have an auto loan. I've got, other mortgage, etc. And when rates start coming down, what's the first thing you start thinking about? It's refinancing. And lo and behold, I'm going to get hit up with offers from all over the place, whether it's from large banks or organizations like SoFi and others. So now is the time to plan for that. And I know that the credit union teams are tackling and blocking right now when it comes to collections and higher delinquencies. But if you don't prepare now for retaining those members and having programs in place, it's going to be hard to play catch up. So one example of how we're helping with that is when a member requests a payoff quote, typically they're calling the credit union and somebody is, making sure that it's on letterhead and all of the fees and per diems and everything are there. And then they're sending that document to the member. And what we do online is we ask once again, why are you here? Are you selling? Are you refinancing? So just by asking that simple question, you can tie them to the right offer at the end. So obviously we're giving them the payoff quote on letterhead, which is needed if they're selling or trading their vehicle in. But afterward, if they say they're refinancing, we can do one of two things. We can show an in-house refi offer, or we can modify the loan. So we can extend the term, lower the payment, and keep them in that loan. And that's a really important retention strategy. And some credit unions may do this if the member walks into the branch, that work to um, implement that loan modification. It has multiple steps to it, and there has to be a policy in place to support that. But by automating that, that 100% of the time that a member is asking for a payoff quote and they say that they're refinancing, they're always getting an offer. It's not by chance. It's not if there are lines in the branch or there's a bunch of folks in the queue in the call center 100% of the time. If they're selling, you can do the same thing, right? We can provide an in-house offer for their new vehicle. And one of the answers that's available is that I'm experiencing a hardship. You
Mhm.
can also send them down the path to get hardship relief if they just are looking to see what they may owe. So again, we're mimicking the conversation that they're probably having in the branch office, and making sure that if they are current and they are selling and they're refinancing, that they're always going to get that offer, and that helps with interest income, but also really important right now, member retention.
Absolutely. I agree. It's interesting because as a recovering reporter, you kind of always, why is the big question. It's the most important question you ask is, why does this matter? Why do you need it?
Mm-hmm.
And so not only does that, show interest in the member, like you said, kind of the retention idea, but also furthering the retention, so I would suspect is the personalization of it. Not personalization as you slap somebody's name in an email, but I'm actually curious as to why you're doing this, and that sends you down a different path than, like you said, the one time skip a pay or whatever it is, where you just a blanket apply or blanket offer it to everybody. So it creates that personalization that everybody talks about right now. Um, and
It's a
so,
so just on that, Sarah, that's a really good point because I think personalization has turned into, making sure it says hi first name and your first name goes in there, but then it's a very bland message and it's one to many marketing. This is more like triggered marketing, right? So based on actions that members are taking, or the status of their loan, it is triggering the right either relief option if it's hardship relief, and or offer for a loan protection product or refi
Mhm.
offer or something else. And the way our platform works is that, because we're connected to over 130 data points in the core system, credit unions can set rules, and then once the member actually um, meets those requirements or their loan status meets that requirement, we can also push an offer for something. And again, it's based on what's happening in that member's life, what's happening with their loan, as opposed to just randomly sending emails. And if you're like me, I was off on vacation last week, and I came back to 3 pages of emails.
At
I
least,
wasn't
yes.
completely offline, but 3 pages of emails, and the vast majority of them are like, hey, first name, and then just delete, 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 delete. And the email channel is flooded, SMS channel is flooded now. So you have to be really intentional.
Hmm. Yeah, so all right, I always end this with the final thoughts as we get to wrap up here. So you are welcome to provide your last minute tips and strategies that credit unions can use to succeed and serve their members.
Yeah, I think the biggest thing is and everyone talks about this, but we have to meet members where they are, right? Members are people, and we are people who are consistently on our devices. And credit unions have spent a lot of money and time on implementing their digital banking platforms, making sure that they're mobile first and accessible to members, but expanding on what's available inside of digital banking on those mobile devices is so critical. And loan operations takes into consideration a ton of different workflows. I just talked about a couple today, but there's changing a due date. There are a whole range of them. And all of them are offline, and there's no reason that it has to be that way. This is what we specialize in. And I think, and there are others as well, but I think credit unions should lean into moving as much online as possible to not just give relief to their staff members, but also make sure that we're meeting members where they are and making sure that those interactions are very personal and that they're receiving the help that they need if they are struggling financially, and looking for ways to provide products that are supportive of what members are looking for. And many of those can lead to fee and interest income opportunities.
Awesome. Thank you so much, Catherine. Appreciate you being with us today.
My pleasure. Yeah. Thank you for having me. Really appreciate it.